Good morning, everybody, and welcome to SPX Daily Plan. And we've got another potentially action-packed day. We've got the JP Morgan collar roll, which I'll talk about a little later on. Well, actually, it's a restrike. It's not a roll because they don't buy back anything and roll it. They let what they have expire, and then they restrike the the collar for the next quarter, end of September, and they restrike that. And we'll talk about how they restrike it. And that happens at around 2 o'clock. That happens at around 2 o'clock, and we'll talk about that. So let's see where we are. So overnight, we kind of tested the 6,200 range, large gamma node up there, and now we're kind of retreating back toward this 6185 as I kind of marked as the pivot. If we're over there, we kind of get pulled up to here. And if we're below this 6185 level, we'll kind of come down towards the closing area on Friday. And then if we break below this area, then the complexion kind of changes. Let's see what we got here. Yeah, we're gonna get to that because I'm seeing things that kind of don't align with what I thought I was seeing before, but we'll figure it out here. Let's go to the options depth. And let's start with the heat map. We're going to start with the heat map today. Okay, so here let's look at the story that the heat map is telling us, and then we'll sort of go from there. So what's the heat map saying? So the heat map is showing us so we got these customer long calls that I thought were part of the IC Wales um, call credit spread. Now I'm not seeing that. I saw it over the weekend, so I'm not sure if there's something wrong with my data or if something happened. I'm going to kind of dig into that either live if I can or afterwards and get back to everybody. Because as some people pointed out, if you look at the OI in the chain, that OI is there. However, that OI isn't updated right now when we see in the chain, and we don't know OI if I sold it and somebody else bought it, whatever. It might, if they're not closed, it'll reflect as OI in the chain, but not the market maker positioning. So I'm trying to dig into what happened at 6,200. Let's put an asterisk at 6,200 and just go on with what we know. So this is a potential magnet 6205 if we can get up there. And if we get through it, then market makers have to start buying and hedging in that direction. And then we would kind of stall out up here. To the downside, like I was showing you before, we have this kind of little pivoty area, 6190, sort of where we are now, and drift and supportive flows from the morning coming from below and then kind of tightening up to the 6170 area, which I'll call the bottom of the chop zone. And then way below, we have the put credit spreads from the IC whale. I'm still trying to figure out what happened there on the top. And plenty of supportive flows coming from down here. Now let me go back to this. So this is market makers. I'm just going to make it net. Let's just give it a couple more points. Not that we're going there. Let's just make it net positioning. Okay, so we have this kind of fly looking structure here, 6250, 6205, and all the way down to 6130 where the put credit spread is. So to the upside, if we break above here, we kind of would pivot somewhere in here in this little dead zone with some suppressive flows pushing us down. So this could carry us up into this area. We have this dead zone here. We have another dead zone here at 25. And a lot of it's going to depend on what happens to IV, if we could kind of break through there or not. Now, if IV picks up, we can kind of grind through this. We have some market maker long supportive structure over here down to 70, which is kind of how I got this zone here. And if we should break below that, we can kind of drift in this direction. In theory, could we get down here? Sure. In reality, it'll kind of take something to get us down there. Now let's go back to market maker exposure. Now let's look at charm for a minute. So charm, which is, we'll just oversimplify it and call it decay, which is kind of what it is. It's the change of delta as time progresses. And we typically don't close in one of these suppressive zones. And so it's kind of, if over 6,200 toward the end of the day, we could kind of start heading up. One potential pin would be in here, one would be up here, and here we have the 6250 bridge too far. It looks like during the day, if we're down in here, we can kind of get sucked into this. And why is that? That's because of the decay from the overhead long options, that fly kind of structure that I talked about. And so we have pinning area, basically where we closed, maybe 6,200. Should we kind of break in the 50, and then of course where the IC whale is. Now let's talk for a second about the JP Morgan collar. So I'm going to assume many of you know what the JP Morgan collar fund is, but just quick educational thing, and I'm not techie enough to have a slideshow prepared. Volsig's did an excellent post on Twitter, as he always does, and I'll put the post in the link later. So what JP Morgan does is they have three collar funds, Papa Bear, Mama Bear, and Baby Bear. And the quarterly is the original, and that's the Papa Bear. And what they do is they buy a collar. They buy a 5%, 20% out of the money put debit spread, and they finance it by selling a call, an out of the money call, 90 days to expiration, making it essentially a free trade. Typically, that's about 3% above where spot is currently trading. So the 69.05, which is expiring today, was put on 3 months ago in March after we had come back from that February high and had that pullback. So those of you that have been following, that 69.05 short call has been acting as kind of a sticky support zone. Now that it's deep in the money, there's not a lot of hedging that the market makers have to do for that. That's basically a 1 delta or a 95 delta. That's all hedged out. So what happens? At around 2 o'clock, JP Morgan will buy the put debit spread, roughly 5% out of the money for September, excuse me, and will sell the call to pay for that. So let's do some quick arithmetic. All right. I've been doing this for quite a while. So, see my calculator? We could do it in our heads, but just for fun, let's do the arithmetic. So we're roughly 6,200, right? Whoops. And they're going to buy or put 5% out of the money, so times 0.95. So they're going to buy a 5890, 5900-ish put. So that number, because once, oh my God, 5,900, that would be great. That's already the floor of the put. So they're going to buy a 5890, 5900-ish. Let's write that down here. 5890-ish long September put. And they're going to sell. I know this is exciting viewing, 6,200. I did this before. I'm just kind of tightening it up a little bit. Times 0.8 is 4960. 4960, bottom of the debit spread. Okay, so let's build that and let's see what that looks like. Okay, let's have some fun. So we're going to go to September. I don't want to open a Forex account. We're going to go to September. What? Do I have something here in September? No, we're going to September end of month. Excuse me. We're going to go to September end of the month, and I said 5890-ish. So let's just kind of go with that rather than the convenient round number. So they're going to buy something like this, sell 4960-ish, and this can change during the day as we move around and as volatility changes, the prices will change. But just I like doing this exercise for whatever reason. And you guys get to do this exercise with me right now, whether you like it or not. You can always tune off, of course. I think it's fun though. Okay, so that's what they're going to be buying ish. Could be, a couple points. And then to pay for it, they're going to sell. Wow, all the way up here somewhere. Let's just call it 75 for round number government work. So it's going to be something like this: 75 top, sell to open, 60, 64, 75-ish call for September EOM. And that's kind of what it's going to be, just for easy mental note reference, I always like the round number mental notes. I just like it like that. So the 5% pullback puts us at 5,900, and we have moving averages around there, whatever. So let's just kind of keep that in mind for today, and not just for today, going forward. Now, also, if you guys have been reading me, and I'm not the only one, a lot of people are talking about hedge funds. CTA hedge funds, the trend following funds, the vol control funds are, according to flow gurus, scheduled to buy about 100 billion, not in one day, but through the month of July. Huh, that's interesting. So I know where RSI, whatever it is, extended, all that good stuff. I'm not saying we're going to the moon. What I'm saying is, it seems like for now, for better or for worse, we're kind of set to kind of go up through July. We're also set to break. If we break below some key levels, the structure gets fragile. I'm not sure where I'd have to look again. Um, It'll be in some kind of update note that I write. Some of it just broadly for free subscribers, or I'll put it on Twitter, more granular for my paid people. But I haven't done that work yet. Okay, so let's look at where we are. So the straddle puts us 31 points. So again, that puts us at around, the straddle puts us at around here. Here would be where like the daily straddle is. Here's the straddle top for the week. That's for the week, based on this 60, 62, 64, 43. If you're like a pinpoint precision quant type, if you're a quantuition type, think 62, 65, 75 ish. And the bottom puts us at 60, 78. So call it 6100 if you want to be too close, 60, 50 if you want to be too far. So suddenly this 6100-ish level, once we broke through that, is becoming a key level to the downside. Of course, 60, 50 and the other numbers beyond there. And that's basically what I'm seeing. I'm going to stop screen share for a second and dig into something, and I'll be right back. Ah, so apparently what happened, and I kind of suspected it, and I don't know if we'll call it confirmation, but somebody else saw the same thing. I've got my spies out there. Somebody else saw the same thing. Some people who are in the know about flow. And it seems like what happened, and you gotta love it. You gotta love it. So remember what I said about open interest? Because somebody pointed out, and let's take a look at this. So this is going to be a fun exercise for all of us. Let's take a look at open interest for a second, and so we could talk about. Now this is long, so I was a genius here. I don't know what I paid for it, but I, I bought it when it was kind of in the money on both sides. So think of it almost as a covered call. So whatever it was, maybe it cost me 3 to make 5. Nothing fancy, just one. But let's take a look at open interest because I think this is instructive. Okay, we see open interest here. Let's take a look. We see open interest here of 19,000, right? So now a lot of people's gamma exposure thing multiplies OI times gamma, and you can just put gamma here. It's not a secret. And how whatever the secret sauce is, they come up with market makers gamma exposure. However, we see 11,000 here on the call side. So the IC whale sold 10,000 of the 6,200, 6,205. So that's 10,000 open interest. However, somebody else came into the market and bought 10,000 of the 6,200 calls. So guess what? I'm the market maker. I sold that crap to him. I have no exposure at 6,200. And so at 6,200, there's maybe, we're at 6,200. There's maybe 800 short calls that other people had. The rest of that's been netted out. So the real market maker position at 6,200 is short 800 calls. The open interest is telling you it's 19,000 calls. No bueno. If you're trying to make some kind of decision based on what the likely flows are going to be, you can make a big mistake. And so I'm actually glad somebody had pointed out that the OI in the chain was 20,000. And that's why, I mean, I used to always look at OI back in the caveman days when I didn't have that. And then if we just look above at the OI, so that's what's going on here. So that creates a somewhat different shape profile than if this was short over here. If this was short over here, it would kind of be an easier mean reversion into this and down into here and getting sucked back up to there. But it's not. And so what happens is these 6285, 6205 calls, if we're over them, then that sends us to the inflection point up near here. If we're below it, they kind of decay because market makers hedge. As we're going up, they're going to be buying. They hedge in the direction of the move. So as we move away, they're going to be selling until they reach whatever the neutral point is. And if we stay below that, these steadily decay throughout the day until we end up wherever we end up. So that's a very different picture than if the customers were short the 6200s. And so that sets us up for an interesting day. Excuse me, I'm yawning. I'm boring myself. Let me take a look and see if there's anything else. Oh yeah. Also we have some data coming up this week. Not today, but we have non-farm payrolls. We have a few other data points. They're in my notes. I don't remember them off the top of my head. And that's basically it. Anybody want to talk about what about some pin guesses while I get my shameless plug links? Oh, and I almost forgot to mention this. So tomorrow at 8:30 ish, I believe, um, Scott Bassett yapping on Bloomberg at the open. Good. What could possibly go wrong? Oh, I love it. May you live in interesting times, they said. So let me get my shameless plug links. I think this is it. No, it's not. See, as far as having all this stuff organized, I'm not the best at back end admin. Okay, so if you're interested in a discount code with for options depth, there it is. If you're interested in a discount code for Mentor Q, copy link, there it is. And of course, I know everybody listening is definitely interested in my Substack link, and I would imagine everybody has it saved in their browser as like the most important link on their in their whole in their whole universe of bookmarks. But in case they don't, that was a little bit of sarcasm. In case they don't, there's my Substack, and me and my brother Binkus are going to be launching something options gelt, kind of a combination of what he does with the scalping and my more iron condor premium butterfly ish oriented trades. Also, I'm going to be kind of doing some simple, well, call center to forget it, put credit spreads, or covered calls or covered strangles or different trades for the casual CNBC tourist, CNBC watcher type person, not for the in the weed quantities. And then there'll probably be a higher tier for real in the weed stuff, maybe with some one-on-one something or other, still working out the details and how to do all that. So stay tuned for that. But what I did want to tell you guys is so on where am I? Let me tomorrow at 8:30. Let me find this here as I lose my audience. Master Trader Greg and Dan will be doing their I'm going to read. Will be doing. They do a live broadcast every day on YouTube. That looks like they're going to be starting soon. I don't know if they started yet. Yeah, 9 a.m. pre-market update. So Greg, I'm not sure if Dan's going to be coming or not. That's Greg. That's Dan. Um, are going to be are going to be coming on at around 8:30 just to do a little bit of stuff with me. They're pretty much straight up TA, local F support and resistance and candle patterns. And Greg's got the quantuition too. Greg looks at a pattern that he's been looking, and Dan too, that they've been looking at for 30, 40 years, and they just know what it's going to do. I've been amazed. So they're my TA mentors. I was in a trading room with them for years. Dan actually is the one that nicknamed me McGraw. Will tell that story. And then um, on top of that, is this oh, okay? On top of that, next Wednesday they do an MT Live, Master Trader Live every Wednesday at noon. So Wednesday the 9th on Tariff Day, I'll be a guest on Master Traders MT Live, and we'll kind of chop it up and talk about gamma and levels and all that. And these guys are funny; they got a good sense of humor too. So if nothing else, it'll be amusing, I'm sure. So anyway, and I'll be tweeting it out and putting it on Substack and wherever people know me. So that's what's going on. Okay, so let's talk about the pins. Let's get back to business. Okay. And let's get back to business here. Oops, we don't need to see that. We need to see this. Okay. We really need to see, if we're talking pin, we need to see OD Charm because that's the only game in town. Well, it's not the only game in town. Gamma Egg has some good stuff too, and they're going to be coming on. I'm trying to bring all the people that I've learned from that have been mentors or whose products I use, because I use a lot of them, and bring them on. And we'll talk about their products, how I use them, get their insights about the market, about hedging, about how they see the market. I kind of synthesize whatever I can and hopefully be helpful to you too. So let's get back to the pin. So we have one 6185 predictor here, which let's just zoom it in a little bit. Let's tighten it up. So we don't have any customers for the overhead yet. So we'll just kind of give it a little bit of overhead anyway. And so we have one 6185 kind of right in here, 75, depending on how we give it, we'll give it a little tolerance. 6195. So we have a few pins well right in there. That's actually interesting place to park. If the decay flow kicks in from here, then we end up over here, 6180. If that should break, then we kind of end up flat on the day. And we have one person predicting a pin all the way down at 6130, going all the way down to the IC Wales puts with a move of, what is that, 60 points ish? Let's see, we closed at 75. Okay, move of 45. So pretty much beyond the expected move. That might have been the expected move based on Friday's close, all the way down there. So the prediction is IV spike, and this structure breaks. Let's just talk about what it would take for that to happen. So take an IV spike, the center of this structure, this fly to break, and for this magnet to pull us all the way down to here, well, then the customer's short strike should give us supportive flows back up into this area of 45.50. But let's just pretend, it would kind of be hard for that to happen. Not saying it couldn't, but and 62.50 is coming. I don't know about today. So 62.50, we have market maker short stall. I don't know what expiration we're talking about here, but I wouldn't be surprised to see 62.50 coming. And that's it. Everybody, please like, retweet, read YouTube, whatever you do on YouTube. Restack on Substack, which I'm still learning. That's quite a different platform to navigate. And that's basically it. And so, well, the easy trade today is to kind of look for scalps within those zones that I talk about in my daily plan. Then my subscribers have my cheat card, and I should have another cheat card coming. Here's my buddy Nanda that did my other cheat card, and here's my daily plan on a card. Of course, that's That goes to my paid subscribers, and that's it. And to a few select friends and family, so to speak, that kind of help me out and I help them out. Okay, guys, have a great day, and I'm gonna go look what's going on, and then I'm gonna end the stream here. I'm gonna leave the live stream open for my paid subscribers, and we'll kind of talk about some other stuff.